Hello there, welcome to Key Trades. This is the trades that we are watching today, which of course is the 2nd of March. So we've got cable in full focus just there. That's on the back of the ADP data and the Beige book as well, coming out from the States. As well as that, we've got the US 500 as well. It did close on that 2000 level, so it's really triumphant at the moment. Has dipped slightly, but we'll talk about that in a minute. And thirdly, of course, we've got WTI ahead of the oil inventories as well. So cable, this pair has been in focus, weighed down by poor UK data. Now, according to the latest release, the construction PMI of the UK hit a 10-month low in February. Now, expectations were of an uptick, but growth concerns are keeping these numbers constrained. And of course, plenty of US data this week as well, playing into this currency pair. Let's get over to Alistair McCaig. He's going to have a closer look.
Yes, once again, the ADP figures have come in better than expected. How much of a barometer this will be ahead of Friday's non-farm payrolls is always a bit of a debatable issue. And it's also worth noting as well that when it comes to these figures, I think it's not so much the employment figures themselves, it's the average hourly earnings that the market is increasingly taking into focus. If we take a look at cable at the moment, sterling US dollar, there has been a bit of a bounce over the course of the day. Worth noting, in the last few days we were in oversold territory as far as RSI was concerned, and we've just popped our head above that 140 level. How long we stay above that level is debatable. Again, dollar strength, sterling weakness continues to be the template we're most expecting. I'm certainly the likelihood of it being able to reach and breach that 142 level looks a little bit on the optimistic side for the time being.
And that was our Alistair McCaig, of course. Now we've got the S&P 500 as well, and indeed the Dow. Now they closed with the best one-day gains since January, but it has dipped slightly off of these highs just now, but still marching towards that 2000 once again. Now investors, they scooped up bank and technology stocks, highlighting a renewed appetite for assets considered to be risky. Okay, Alistair McCaig is going to go through all of that in more detail just now.
Well, even though the latest US reporting season was less than impressive, we have seen a pretty decent run as far as the S&P 500 is concerned since about the 11th, 12th of February. We've added the best part of about 200 points to the market. If we take a look at the chart, we can see it just over the course of today has rather hit its head on that 100-day moving average, around about 1,986. It'll maybe need a little bit more information data, an impressive Fed Beige book, possibly this evening as well, wouldn't go amiss, to help it just reach and breach that level. And then the psychological 2000 with, once again, that moving average sitting around about 2005 just above. Plenty of headwinds just above this region here. You do rather feel that the S&P 500 might run out of steam in the not too distant future.
Okay, lastly, we're going to look at the WTI ahead of the oil inventories report as well. Now, oil has indeed gained lately, but there's been some industry reports showing a rise in US crude stockpiles to a new record, which is putting the price under pressure once again. Of course, it's extremely volatile at the moment. Now, another blow to a seemingly unified effort by oil producers to tackle the stubborn oil glut. Let's get back over to Alistair to really scrutinise this number just now.
Well, these oil producers certainly talk a good game, but as yet haven't brought much in the way of actions. It's worth noting that when we look at WTI, US light crude, and on the chart here we can see it's been pretty much range bound between about 35.30 and 27.56 over the last couple of months, certainly over the course of 2016, the vast majority of time. It's also worth noting that crude oil inventories, or rather oil inventories full stop, have reached about 1 billion barrels. By the end of 2016, it's estimated that that will reach 1.1 billion barrels. As far as oversupply is concerned, we would be talking about a number of months, let alone weeks, of oversupply, even with the advent of any serious oil production cuts from any or even all of the oil producing nations. With that being said, we're reaching the top end of that range. We're very close to overbought territory. Once again, I think we'd be anticipating some sort of selling pressure materializing around about $35 a barrel.